we found an unusual trade worth $3.1 million on Starbucks stock, ticker symbol SBUX. And what's very interesting about this is that Starbucks reported earnings and dropped to this support level right over here. And so could this be a buying opportunity? Well, let's find out by analyzing this unusual option activity that shows how this wealthy investor is trading Starbucks now. Are they buying the dip or are they selling? So that we can also make the same financial decision to make money while the rich are getting richer. Because as we all know, the rich have more access to exclusive research and information, including leaked insider information, to make better financial decisions. This is how smart money always seems to be one step ahead before the rest of the market catches on. And so without further ado, let's dive into our analysis so that our subscribers can profit from this deep knowledge too. Now, if you've been following our channel, you know that our previous Starbucks trade ended on February 7th, on this day when those options expired. And we shared a summary of our trade in this video here, where we made 385% because we started the trade back in December of last year. And so you can see that the stock clearly went up based on our data analysis. And so if you missed this video, we'll put a link at the top here where you can learn in hindsight how we were able to analyze the data to make smarter financial decisions. And so what is going on now with Starbucks? Let's take a look at the new data now that we detected on April 30th when the stock dropped after earnings. As we can see here on the options time and sales tape at 11:17 at the 58-second mark on April 30th, these September 19 options at the 80 strike calls were being traded 5,000 contracts for a price of $6.20. Now keep in mind, we need to multiply by 100 since each option contract represents 100 shares of stock. And so each of these call options costs $620. And since there was 5,000 contracts being traded, we multiply that out and we get a total trade cost of $3.1 million. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the trades with a lower risk and a higher probability of profit, then make sure to go to our website. We'll put a link at the top here where you can get better trade ideas based on the trades of wealthy investors, because not all of their trades will be profitable. Some will be a loss, but as long as we diversify our portfolio and pick stocks based on stronger data, then we can significantly increase our chance of profit. Now, with that said, we still traded this, but we use position sizing to manage our risk. As you can see here, for these September 19 options at the 80 strike calls, you can see our position here. POS stands for our position, and the green color means a buy position because we also bought these 80 strike calls for $6.20 each. And so when we analyze this trade, you can see here on the risk profile profit loss graph, and we can take these February 7th options out since they have already expired. These were our previous Starbucks trades. So again, make sure to watch that video if you haven't. You can see that this trade is a long bullish trade because on the x-axis here, which represents the share price of the stock, as we move up in share price, this becomes more positive, more profitable. And we know these were new opening trades because if we look at the historical data before these trades were made on April 30th, we can see on April 29th, the day before, for these September 19 options at the 80 strike calls, we only had an open interest of 251 contracts. And so it would not be possible to close out 5,000 contracts if there were only 251 open contracts. And that is why we traded this. But again, we use position sizing to manage our risk. Because if we analyze this trade some more, notice that on the options Greeks, this trade has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the break even on this trade, which is right here, where it meets the zero profit loss line here. The break even shifts higher as time goes on. And so at expiration on the blue line, the stock needs to trade above $86 per share for this trade to be profitable, even though the strike price on these calls is at $80. And because of this risk, along with other factors, we only took a small position in this trade. We put most of our capital in the lower risk trades that we share on our website that have a higher chance of profit. If you want to get access to those, we'll put a link at the top here. And if you missed our previous analysis on Starbucks, we'll link those two videos and let us know in the comments. Do you think Starbucks stock is a good buying opportunity now, or do you think it will break down lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.